And joining us for further look on what's playing itself out on that market scene is Chantal Marx from FNB Wealth Investments. Chantal, always a pleasure. Thank you so much for being with us today.
Oh no, it's wonderful, especially on a really nice green day for the JSE.
Yes, we haven't seen this over the last few days, and I'm keen to find out what has markets feeling so upbeat today.
Well, I think it's the fact that the Chinese authorities are going to step in and get involved in the Chinese stock market in particular. I mean, obviously that would have provided support for Tencent and that filtered through to Naspers and Prosus, but I think that it did lift energy a little bit, that the Chinese authorities are actually willing to go the extra mile to stimulate that economy and to stabilize the capital market in that jurisdiction. The other thing that I think has been helping has been pretty upbeat earnings numbers and trading updates that we've been seeing coming through. I mean, with the exception of Woolworths, I think we were positively surprised by both Clicks and AVI. Karoo reported really strong numbers overnight as well. And then we've been waiting for that information to come through from the retailers. We wanted confirmation of what the environment was like for them against the backdrop of kind of pressurized consumer wallets, high interest rates, and generally negative sentiment within the consumer space. So I think with the exception of Woolworths, I think there's a lot to be positive about.
I actually want to talk about Woolworths because I think it's a very interesting picture that they've painted there for us. What we've seen there, Chantal, is that they did manage to increase prices below inflation, which I think is always good, but volume still went down. I'm keen to find out what that means for a Woolworths customer, which is supposed to be an affluent middle class in South Africa and one, that is supposed to fare better in times of economic difficulty.
So I think from a food perspective, it really is heightened competition, particularly from Checkers. Checkers has put in a lot of effort in improving its fresh offering. We know that 60/60 has really elevated that franchise as well. And there are other reasons why consumers might be preferring a Checkers over a Woolworths, particularly because of the pressures that the consumer wallet is facing. So even if you're looking to a upper or affluent income customer, they're still aware of the economic environment around them. And shifts in consumer behavior like that, I don't think are unnatural. We also had Woolworths Food specifically struggle a lot with stockouts in the middle of last year when load shedding was quite intense. And that's just because of its massive and wonderful commitment to the cold chain. But I think that they lost a little bit of consumer loyalty there. And then in fashion, beauty and home, if you're going to miss the first few weeks of the new season, it is going to hurt the entire season. You're going to have excess inventory, you're going to have to discount, you're going to miss that initial surge of customers coming into the shops to do their summer shopping. And I think that it is very unfortunate for Woolworths that the port congestion led to this scenario playing out for them. Because in actual fact, if you go into a Woolworths store, the fashionability of what they're offering is actually pretty good, as is the quality. But I think that they missed that initial surge and they've been struggling to recover from that.
It is a rather, I think, a colourful picture we are seeing there for them. I'm keen also to look at Clicks, record numbers for Clicks there. What was the secret there? I'm wondering if people gave toiletries for Christmas gifts. Not sure what to make of it, Chantal.
Yeah, it's the lipstick effect, right? Small luxuries. So when you feel like you can't afford to do something big and fancy or buy something huge or invest in something big, perhaps just upgrading your makeup or spending a little bit of extra money on bubble bath and foot soap, I think, is something that you can do. Apart from that, there's a massive defensive angle to that as well, right? Personal toiletries and pharmaceuticals are quite defensive because you don't stop needing these things when the economy is under pressure. And we had an inkling that they were going to do well, which was actually confirmed yesterday by a tax trading update that they gave us, which was so interesting because they specifically mentioned pharmaceutical and beauty retail doing quite well. So really good to see that coming through in Clicks' numbers. UPD, which is their wholesale business, fell back a little bit, or fell back behind consensus from a sales growth perspective. But the reasoning behind it, I think, is quite good. They've cancelled 2 contracts that were concluded on unfavorable terms, or not renewed them. And that means that margins in that business is going to improve once they work those contracts out of the system. And I think longer term, that is a better footing for Clicks to be on, rather than to have kind of margin dilutive business on their books.
Also, let's chat on AVI. Very interesting, I think, products that they have under their belt here, from Baker's Biscuits to Yardley. And I think, this is possibly also why they've managed to do well over this period. It looks like they've got products at different price points and also just well diversified.
Yes, I mean, in their personal care, they've got the personal care business. We know that is actually, interestingly, one of the only growing categories of spend in the South African basket. So very well positioned there in terms of the price points that they charge as well. It's not they don't have expensive brands under their umbrella. And then within their foods business and beverages business, it's staples, right? It's stuff that you have in every single household. So I don't think people start changing their brand of tea and coffee. Maybe they try something else, but it just tastes different. It's it's not the same. So I think that they're benefiting from the fact that they are invested in consumer staple products. And I was actually surprised that Spitz did quite well, particularly on the footwear side over December. So perhaps people also thinking about maybe buying quality when it comes to semi-durable goods like clothing and footwear, rather than buying quantity. So I think that spoke very well for them. Obviously, I&J, very, very cyclical business. It's always the fly in the ointment. When everything else does well, I&J tends to struggle. Thankfully for them, the converse also seems to be true, but really a tough time for I&J. Overall, though, from a trading statement perspective, seems to be tracking ahead of consensus expectations. So that's why we saw a really solid reaction to those numbers in the market today.
Before we move on, Chantal, I just want to ask you, one thing I saw here with, I think, Clicks, Woolworths also mentioned it, maybe AVI as well, all of them mentioning what happened with the ports in December. This is a theme we can anticipate as we see, our retailers coming out with some updates.
Yeah, it was one of the themes that we were highlighting in our preview to clients as well. Ports and port congestion. If you are an importer or import a large bulk of your product, this is going to be a massive issue. And we saw that play through for Woolworths. Clicks not being that impacted, and AVI being impacted in terms of its ability to export its I&J product, also hampering the AVI group. And I think that this is going to come through in these numbers as we get more clarity on how festive season trading went. And it just shows how absolutely disruptive it is. And either we're going to have to see a scenario where port efficiency improves, or we're going to see increased localization, or possibly a combination of both. And within the retailer space, we've been talking about localization for years and years and years, and that was mostly related to fashionability and quick response. And TFG is exceptionally well positioned in that space. We know that they manufacture a large amount of their clothing locally, and that also gives them the ability to turn around their stock quite quickly. So I think we could start seeing more and more of that taking place. You've got a thing called positive externalities or negative externalities when you're talking about issues like the port issues. Perhaps this could actually be a positive externality for South Africa, growth in the clothing and textile manufacturing space.
With that said, Chantal, keen to get which counter you're going with today.
Yeah, so I briefly mentioned TFG because of their localization strategy. I think that is going to stand them in good stead when we look at these retail festive season trading updates. I've also noted that their performance is lagging a little bit. It could possibly be because they are more on the credit retailer side, or perceived to be more credit retail than cash retail, and that cycle is shifting somewhat. But I think that they would have performed very well over the festive season trading period. Also confirmed in the attack update that Total Sports and Sports seen both TFG brands did exceptionally well within their malls. I don't think the credit cycle's fully turned yet, so I think this one still has some legs.
Fantastic, Chantal. Always a pleasure speaking to you. Thank you so much for joining us this afternoon. That was Chantal Marx from FNB Wealth Investments.